Some of the country's most popular stocks, including Telstra and Qantas, hit new records. Job vacancies fall ahead of next week's big interest rate meeting, and streaming giant Netflix is setting itself up to be a major gaming company. It's Friday, the 31st of March, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Had to check the date just there, Sean, because yesterday I'm told I said it was Wednesday the 30th of March.
So we've gone from Wednesday the 30th to Friday the 31st of March. Poor old Thursday missed out.
Thursday missed out entirely, yes. And look, to the listeners who contacted me to point out my mistake, I can only say I'm amazed that it doesn't happen more often. Don't you think, Sean? Because half the time I don't know where I am or what I'm doing at any given point. So the fact that I even managed to get the date right today is a minor miracle in itself. Sean, great interview coming up after the show today. You're speaking once again with Robert Giles, the CEO of food manufacturer SPC, who you spoke to about 18 months ago during a very interesting time for the company.
Yes, they were sort of the first company to come out and mandate vaccinations for staff. They got a lot of media as a result of that. And I speak to Robert all about that. Also speak about just how SPC is going, what's happening in terms of product. It grows a lot of its stuff in the northwestern area of Victoria, what's happening in terms of energy prices, transport prices, all types of things. Fascinating chat. Also a little bit about where to for SPC next.
Yeah, it's coming up later on. The main story this morning, though, Sean, as the first quarter of 2023 draws to a close and there are signs that the interest rate cycle is peaking, investors appear to be changing their advice. Rather than relying on a rising tide to float all boats, they've pushed up prices of specific stocks like Telstra, Qantas, QBE and WiseTech Global to multi-year or even record highs.
Yes, it's the idea of needing to be an active investor in a rising interest rate environment. While money was cheap because rates were low, the theory goes that it mattered less what financial services company you invested in or what tech company or transport group you bought. Everything did okay. But now several big investors say the rising rate environment has changed the rules. Looking at the fundamentals of a company, its management, how it's adapting in its market, they're the sorts of things that become critical to success, at least in terms of share price. While the S&P ASX 200 will end the quarter this afternoon up slightly from where it began, some stocks are near record levels. Telstra closed yesterday down 1 cent to $4.20, but during the day it hit its highest level since 2017. That was $4.24. Investors like the fact that the rollout and integration of the national broadband network is now complete. That means everyone knows the playing field, and Telstra, with its massive reach and booming mobile business, isn't struggling against structural headwinds. Qantas is another stock almost back to pre-pandemic levels, having early in the pandemic dropped to around 1/3 of what it was back in late 2019. Yesterday, it closed up nearly 2% to $6.60. A bit like Telstra, structural headwinds aren't as strong as they used to be, pardon the pun. Also, private equity now owns Virgin, the big competitor. Qantas has a much more disciplined competitor that's less likely to launch price wars compared to pre-COVID. Qantas has won market share. Its domestic capacity is back to where it was. International capacity is getting there. Investors like it. QBE Insurance is another one that's done well recently, even if it is off its highs of the past week. Its share price has nearly doubled since the beginning of COVID, when there were fears groups like QBE would have to pay out all sorts of business insurance. That didn't eventuate, and QBE and its brethren started getting back some pricing power. They've been able to push through higher premiums and people are paying them more. Yesterday, QBE closed up 1.4% to $14.53. And the final one is WiseTech Global, the tracking software group that seems to be expanding by the day. While many other tech companies have been sold off, WiseTech is at record levels. Big investors love management, and I mean love management. Richard White founded the company in 1994. He's been running it ever since. They like the product, particularly because tracking goods is a growth industry. It was up 1.7% yesterday to $64.60.
Now, Sean, it's really important for me to note here that we are not an investing podcast, not at all. So please make sure you get advice on your personal circumstances, particularly when you are making these kinds of decisions. One thing that I'm curious about, Sean, and I'm a bit of a novice. honestly not the best investor. Does the fact that these companies are at record highs mean that it is too late to earn decent returns?
Possibly. It's a really good point. I mean, I don't have an answer for that. Share prices reflect future earnings expectations. And if the economy slumps or rates keep rising or fuel prices soar again or the government intervenes in the market, then things could change very quickly. Earnings could fall and suddenly these companies become overpriced. As you say, these companies' share prices have already run hard. So there's definitely a risk that they have topped out. But at the same time, the share price reflects what investors think. And at the moment, Michael, they like specific stocks like Telstra, Qantas, QBE, and WiseTech Global.
Yeah, and get some professional advice. That is the take-home message here. How did the local market perform yesterday, Sean?
S&P ASX 200 had a pretty good day. It finished up 1% to close at 7,122 points. Pretty good performers among the large caps. Both BHP and National Australia Bank closed up almost 2.5%. Transurban, Commonwealth Bank and Westpac were both 1.5% higher. The retailers were mixed. Energy stocks were flat. Insurers did pretty well. Best of the sub-indices was information technology. That index closed 1.7% higher. The gold stocks generally didn't do so well. Newcrest Mining, the market leader, ended lower.
And what's going on international markets?
Oil prices have come off a bit after figures showed that demand in the US fell. Gold is also lower, Michael, while the Aussie dollar is trading just under 67 US cents.
Demand falling in the US, that would be as you come out of winter, right? And so the demand for heating, etc. But then doesn't the summer driving season kind of pick in and boost demand?
I might have this wrong, but if it's not the biggest, it's one of the biggest events in the calendar in terms of oil consumption is that US driving season. Now, everything we talk about, it's always relative to expectations in a way. So it's kind of hard to make a generalization on that. But certainly you're right in that summer is a period where everyone in the US jumps in those gas guzzlers and takes off.
All right. We'll be back in a moment with the rest of the day's business news. Sean, job vacancies fell 1% for the 3 months to the end of February, suggesting some of the heat is coming out of the labour market.
A fall in vacancies in retail trade drove the drop, and it's the third consecutive quarter of lower vacancies. Having said that, the market still remains pretty strong, with 493,000 vacancies at the end of last month, which is double what they were 3 years ago. The number is 9% off its peak of May last year, however. This all feeds into the Reserve Bank's decision next week on whether to lift interest rates again. That'd be the 11th successive time, or perhaps pause. A growing number of market economists now expect rates will remain on hold. For example, Commonwealth Bank is now tipping a pause in the rate cycle on Tuesday.
Sean, there was plenty going on in Canberra yesterday, the last sitting day before the budget session in May, which always seems a little bit unusual, doesn't it? The fact that really they've got an entire month and a bit, really, where they're not sitting.
Yes, that's very true. You wonder sometimes whether they should sit more. They do sort of estimates and all sorts of other things, and they've got to look after their electorate. I'm a bit generous to them, but yeah, I kind of agree. Anyway, yesterday around Canberra, Attorney General Mark Dreyfus introduced the bill to constitutionally enshrine an Indigenous voice to Parliament. Opposition leader Peter Dutton accused the Prime Minister Anthony Albanese of dodging questions, seeking more details about the voice. He said there isn't enough detail and it could be argued in High Court for years, costing taxpayers billions of dollars. Really? I don't think so. Anyway, away from the voice, the government has appointed a panel of academics and experts to recommend benchmarks for school systems to adopt to be eligible for funding under the National Schools Reform Agreement. The Small Business Ombudsman, Bruce Bilson, will review how government departments deal with small businesses looking to win government contracts. And Treasurer Jim Chalmers said he'll today receive a review of the Reserve Bank before releasing it some point over the next few weeks. Shadow Treasurer Angus Taylor said he's open to appointing full-time central bankers to focus on inflation. It's good, though I'd imagine that the Reserve Bank probably have 400 or 500 people who are full-time central bankers, but not quite sure what that means. Anyway.
No, that's a little bit confusing, isn't it?
Yes, I presume he means board members, full-time board members or something or other.
Oh, must be.
But that's what there's hundreds of people at the Reserve Bank focusing on employment and inflation. So who knows?
That's a little bit mysterious, quite enigmatic. We shall find out. Sean, unions will push for a record 7% increase in award wages for 2.6 million workers, despite warnings that such an amount would trigger further inflation.
The Australian Council of Trade Unions' submission to the annual wage review by the Fair Work Commission suggests the minimum hourly rate for the lowest paid workers shift from $21.38 an hour to $22.88. The annual minimum wage would then move up to $45,337. The peak union goes further, arguing the 7% increase should flow through to other workers on minimum award rates. Of course, an award rate is different to the minimum wage. They're talking about everyone ranging from hospitality workers, where the minimum award rate is $66,000, through to pilots, where it's $200,000. ACTU Secretary Sally McManus said inflation-linked wage rises were necessary for workers on the lowest wage and the millions more on higher award rates, as both had suffered the largest real wage cuts on record.
Some lenders, Sean, though not the major banks, have started cutting fixed home loan rates as financial markets price in the potential for lower interest rates next year.
The amount of interest you pay on your home loan, Michael, is determined by a bunch of things, but two important factors are the amount of competition in the market and the cost of money to the lender. Now, we know competition's fierce. ANZ boss Shane Elliott told us that this week. The cost of money has been rising for lenders along with interest rates for more than a year. But now some investors reckon rates will have to pause this year and start falling next year on the back of an economic slowdown, the fragility in the banking system, and the fact that inflation looks to have peaked. That's triggered moves in the bond market, Michael, which has pushed down the cost of money. And some lenders like ING, Macquarie Bank and People's Choice have started cutting fixed-term loan rates. Too hard to explain to you, Michael. Moral of the story, shop around.
Oh, that is brutal. And
you started laughing in the middle of it. I thought, oh, I've lost him.
No, only because you said bond market and then you said, Michael, as though you're just trying to prove a point to me that the bond market is interesting. And I've never said that it's not. Actually, no, I have said it's not interesting. I've said that many times. What I've said is that I've never declared it to be unimportant. I've said that I appreciate the importance of it and the significance of movements in the bond market. I just disagree with your characterization of it sometimes as being fascinating and really exciting, because I don't think it's that.
It's one of those things. I played golf in the last couple of days with a couple of friends, and I play golf with them maybe 4 or 5 times a year, and they're both reasonable golfers and I'm not. And I just happened to have a round where I hit the ball much better than I have for ages, but their enthusiasm for my golf, notwithstanding they were both a lot better than me, it was almost, I don't want to say condescending. And, I just want to say Doris and Adam, good guys, but the faint praise, oh, Sean, good shot, well done.
Your game's come a long way, Sean.
Yeah, that's right. And it hasn't. It was just like they were being nice to me, but
they just need you to keep turning up because they're going to start introducing a wager on some on some games, and they need you thinking that you're better than you are.
Maybe. Anyway,
they've got you. Now, onto a story, Sean, that, well, I'm very interested in this because I love anything to do with aviation. But Qantas, Airbus and the Queensland government will all contribute to a feasibility study to explore the creation of a $400 million ethanol-based sustainable aviation fuel factory in North Queensland.
The idea is to use ethanol from sugarcane and wheat starch, turn that into sustainable aviation fuel, known as SAF. The two airline industry leaders have committed to invest as much as $300 million to accelerate the establishment of SAF in Australia, or at least of an SAF industry in Australia. Construction of the facility could begin in 2024 and produce up to 100 million litres of SAF each year. All this is good, but it's on the drawing board at the moment, no more. What that we're talking about is a couple of $1 million from Qantas and from Airbus, less from the Queensland government, to do a feasibility study. It's an early but significant step towards turning agriculture and sugarcane byproducts into aviation fuel in Australia.
Yeah, it's an interesting story. How about this one though, Sean? Clive Palmer. Clive Palmer is seeking almost $300 billion. That's right, B for billion. $300 billion in damages from Australia in a case related to stalled iron ore projects and emergency legislation passed by the West Australian government.
Yes. Now, Palmer has enlisted former Attorney General Christian Porter from Western Australia. He's now working as a barrister. He's asked Porter to help fight the case lodged by his Singapore headquartered Zeph Investments. According to the Financial Review, the Palmer legal team has filed a notice of arbitration seeking $198.2 billion in damages, plus interest and costs under international trade law, claiming the Western Australian law was rushed through Parliament in 2020 and it breaches the ASEAN-Australia-New Zealand Free Trade Agreement. Now, Palmer has long flagged taking this matter to the international legal arena. He tried it here and it got kicked out. Now he's done that in terms of suggesting it breaches the ASEAN-Australia-New Zealand Free Trade Agreement. $300 billion. Now, that's actually not much less than the AUKUS deal. Wasn't that $348 billion or something?
So we could pay this money to Clive Palmer, or we could buy some pretty nifty second-hand submarines.
Basically. Quite amazing.
Fantastic options there. This is terrific.
Or maybe you could build some schools or, pay nurses more or something like that.
What are you suggesting there's better uses for that money, Sean? We will move on. Medibank shareholders have taken legal action against the private health insurer for not disclosing alleged cybersecurity deficiencies.
The class action was filed in the Supreme Court of Victoria on behalf of shareholders. The statement of claim includes allegations that Medibank breached its continuous disclosure obligations by not disclosing to the market information relating to alleged deficiencies in its cybersecurity systems. Medibank reported the massive data breach last October, of course, after Russian hackers stole the sensitive health records of almost 10 million Australians. The cyber criminals have since dumped all the customer information they stole from the health insurer on the dark web after Medibank simply refused to pay the ransom. Maurice Blackburn has already launched a compensation claim against the health insurer over the hack.
All right. International news now, and Taiwan is becoming the center of Chinese-US relations after the country, which Beijing obviously considers to be part of China, pushed for a better tax deal.
It doesn't sound very sinister, but if the US did a tax treaty on trade with Taiwan, which is the home of the semiconductor chip, it pretty much means it's recognizing that country as a sovereign nation. It doesn't do that now. If it did, it would be considered a major swipe at Beijing. Not having a better tax treaty with Taiwan is a big problem for Washington because the US needs chips by the busload, high-quality chips by the busload. And, Michael, they're very small. So we're talking about a lot of chips here.
Is that an official unit of measurement in the semiconductor industry?
I do believe so, yes.
We've just had an order from Intel for 3 busloads.
3 busloads.
3 busloads of semiconductors.
I mean, the problem at the moment is that Taiwanese companies producing them and selling them have to pay tax in 2 jurisdictions, at home and in the US. There's just not much incentive, really, to invest in the US and provide too many chips there. Of course, the Taiwanese president is in Washington this week, so that's why it's come to a head. But it's just interesting that semiconductor chips has become the real flashpoint of diplomacy between Washington and Beijing.
Yeah, it's a really interesting one. We've actually got a really interesting interview coming up early next week, and it kind of looks at the whole semiconductor space, but from an investment perspective. So it is well worth sticking around for that one, which I think is coming up on Monday, Sean.
Yeah, so those sticking around from now till Monday might be a while.
Oh, I mean, there's plenty to listen to. Fear and Greed has quite an extensive back catalogue.
3 years. That maybe if you listen to it all in a row, that might get you through to Monday.
Oh, dream result. Spending the entire weekend with you and me. Goodness me. Finally, Sean, Netflix has already entered gaming at a small level, but now it's looking to shift into streaming games on television sets.
Yes, at the moment you can access a Netflix game via a smartphone or tablet and you need to download it. But according to Bloomberg, the world's largest streaming service wants to shift into gaming on TV. Theoretically, you'll pay for your streaming service and that will come with the ability to play Netflix games like Stranger Things 3, The Game and Card Blast. You'd know that one, wouldn't you?
I have never heard of it.
No, me neither. Anyway, that's what it's called. The idea is to supplement Netflix's shows and movies and help retain customers as the company raises subscription prices. Expanding the offering to TV sets would definitely be a milestone. Netflix is now built into many smart TVs and available on a number of platforms, including ones run by Apple, Amazon, Google. So this change would make it very easy for people to access gaming via Netflix.
All right. Now, up next is the Fear and Greed Daily interview with Robert Giles, CEO of SPC.
Yes, all about how the company is going and its plans for the future. Very nice fella, Robert Giles, who also mentions, Michael, that he's 100 pages into your book.
Yes, How to Be Remembered, which is available wherever you buy books. And Sean, going from CEO of SPC to another acronym, MEA, Most Enthusiastic Advocate, quick nomination. We received an email yesterday from a regular guest here on the show, Roger Montgomery from Montgomery Investment Management, because we were talking yesterday in yesterday's show about the $64 question. And he sent us an email just saying, hey guys, just FYI, read the podcast, and sent us a link to the fact that it was a TV show that was called $64,000 question, but it actually began before that as a radio show called the $64 question. And obviously, TV needed to amp it up a little bit, and so it got bumped up to $64,000. So that's why you hear kind of two different versions of it, $64 question and $64,000 question. So
yeah, until Roger actually sent that through, I always knew the original was $64 question. I assumed it was TV. I didn't know it was radio. So there you go.
Yeah, there we go. So thank you very much, Roger, for listening and for contributing that one. And thank you, Sean.
Thank you, Michael.
It's Friday, the 31st of March, 2023. Make sure you're following the podcast. Join us online, of course, on LinkedIn, Instagram, Twitter, and Facebook. And stay up to date, of course, on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can get yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.